In this video, I'm going to explain what is the right business structure for your Amazon business. Now, firstly, a bit about me. My name's Arnie Shields. I'm partner with Dolmanbateman Chartered Accountants in Sydney. We help Amazon sellers. We have over 300 Amazon sellers as clients from all around the world, from people selling in the top 1%, so selling multi-millions in sales, to people just starting. Plus, we sell on Amazon ourselves. We started our Amazon business in late 2016 so that we get the data from Seller Central and properly advise our clients. Now, at the start, it didn't really matter how much we sold. We'd figure we'd eventually get our money back, but we would know exactly the processes to go through, from setting up accounts to freight to PPC and selling strategies. Now in our second year, we've got over 8 successful profitable products and plan to launch 12 new products in the next 12 months. Plus, we sell in USA, Canada, UK, Europe, and Australia. So that any issues that you face with your Amazon business, we've dealt with it ourselves or helped our clients with it. So let's talk about the key question that most people ask is, what's the best business structure that you need for your Amazon business? One of the important things to remember is that your business structure is unique to you and your personal circumstances of your financial position. So today we're going to give you the background that we look at and the elements that we take into account when we're determining what is the most appropriate business structure for you. Now, the first thing we look at is your personal profile, because everyone's different. So are you married, single, de facto, getting divorced? Do you have kids? What age are they? These matter because it may open up opportunities for efficient tax planning or asset protection. And we'll also look at your other businesses and corporate structures that you've got in place already, because we may be able to use those other businesses and structures to save you tax. Next, what is your income? Your Amazon business will be making profits, but it's unlikely you'll be able to realize those profits as free cash for a couple of years. So what it means that you'll be paying tax on your profits, but you will not have the access to the cash to pay for it yet. So we want the tax to be as low as possible. Now, the company tax rate is 27.5%, and that individual tax rates are from 0 to 18,000. There's zero tax. From 18,000 to 37,000, it's 21%, so that's lower than the company tax rate. From 37,000 to 87,000, it's 34.5%, so that's 7% greater than the company tax rate. And if you're earning from 87,000 to 180,000, it's 39%, which is 11.5% higher than the company tax rate. And if you're earning over 180,000, it's 47%, so that's 19.5% over the company tax rate. So basically, if you're earning over 37,000, you're going to be paying more than the company tax rate. And more on this later, because it has an important cash flow effect. The next question we ask is, what assets do you have? Property, shares. And basically, if you've got property, you need to think about some type of corporate protection to keep those assets separate. Because what we want to do is we want to quarantine each business so that if something goes wrong in one business, it doesn't affect your other assets. That is, we want to keep your property and personal assets away from your Amazon business and other businesses that you have. In whatever structure we set up for you, we want to make sure that it's simple for you to operate and understand. Now, there's going to be lots of different things going on in your Amazon business, and we don't want a really complex structure in place to make things messy. I see many instances where people have set up complex structures, multiple companies and trusts, only to put things in the wrong entity, then in effect ruins any possible benefit that the structure was supposed to provide, and in some cases make it even worse. And by keeping it simple, it also keeps your costs down, enabling you to invest more in inventory. So let's talk about the risks of an Amazon business. Running an Amazon business is unlikely that you'll go broke owing suppliers money, because everything's paid in advance, such as inventory, or deducted from your payments, Amazon costs, and you have also very low fixed costs. Amazon businesses that fail don't really fail, they just tend to fade away due to no cash flow. The big risk in an Amazon business is litigation. And from that we mean product liability. Now, this is quite rare, but when it does happen, it can be big. So basically, what is product liability? Your product causes an injury or damage to somebody or something, and they sue you as a supplier and manufacturer. Now, I do a lot of litigation work. I'm an expert witness in court-related matters. And I see many product claims for many different things. And we don't want you getting sued individually and someone taking your house. And even if you win, it could be 3 to 5 years to resolve and lots of legal fees fighting it, which you don't get back. So we want them to sue the company, not you. So if someone sues you for product liability claim, then you take that company off to the liquidator and start again. Now, product liability insurance means that the insurance company will take over the claim and you can continue running your business. The other risk from Amazon is, and it's far more common, a lot of my bigger clients have had these issues, is trademark, patent, copyright disputes. But they tend to escalate and can be managed rather than going straight to litigation. The other factor we look at is what stage of the business are you up to? Is it just product research? Are you placing your first order? Are you selling on Amazon? Or are you selling lots on multiple marketplaces? Because all these things change what we may suggest for you as the most appropriate business structure. So basically, when we're looking at the right structure for your Amazon business, we take into account asset protection, keeping your assets safe, tax efficiency, making sure that you pay the lowest tax possible, commerciality, ensuring that the structure is appropriate for your business operations, that is, trading internationally in multiple countries, and administratively simple, having a structure that you can understand and keep your costs low. So let's go over the structures available. So a sole trader, business in your own name, Joe Citizen trading as Citizen Cookware. It's the simplest structure available and the lowest costs. Basically, profits will be declared in your own tax return and taxed at your marginal rate. So if you're earning $87,000 from your job, the Amazon profits will be added to that and taxed at 39%. Any liabilities will also be in your name as well. So basically, the only people who should be trading as sole traders on Amazon have low income and do not own property. But as soon as they have validated their products, they should be thinking about moving to a company. So partnerships, 2 or more people doing business together in their own names, like Joe Citizen and Bill Blogs trading as Citizen Blogs Cookware. Now, you should never be trading in a business as a partnership ever, not even with your spouse. Now, the reason for that is that you could be liable for the actions of the other partner. And if a problem happens, the creditors will look at the partner with the easiest money to access and not say a 50-50 split. So if you're going into business with somebody, it needs to be in a company. And plus, if you're going into business with somebody, you need to think very carefully about how you will get on in the future. You should have, as a minimum, a shareholders agreement that sets out before you start what happens if it all goes well, how dividends are declared, when they are declared, but also what happens if it doesn't go well. What happens if someone needs to put in more money into the business? Do they get paid interest? When does it get paid out? What happens if someone works more in the business? What happens if someone wants out? If you set these out in the beginning, it'll save you a lot of angst and legal fees in the future. And if you're thinking about going into business with someone other than your spouse, you should think about whether you should have a business together, like joint ownerships of the products, or whether you should have separate products and separate businesses, and perhaps have a mastermind group together where you can help each other out. But basically, let's forget about a partnership as a business structure for Amazon. Companies, Australian Pty Limited company. I like companies. They're designed for businesses and they're recognised around the world. They're governed by the Corporations Act, which means they've got a great legal framework backing them. The company tax rate is 27.5%, which is pretty low, and it's got dividend imputation, which no other country has, which makes it quite valuable. So basically dividend imputation means if you've got a company declares a dividend to you, then you get a credit for the tax that has already been paid on that income. So basically 27.5% tax paid. So we can do lots of things with companies in terms of tax planning. We could pay a salary to your spouse who has no income to use up their tax-free threshold. Companies provide protection from the outside. A shareholder of a company cannot be liable for the company's liabilities. However, a director is not liable unless the company trades whilst insolvent. Now, insolvency basically means unable to pay its debts as and when they fall due. An Australian company is all you need to trade around the world in every market. You don't need LLCs or UK companies. Now, the time to get a company, I think, is when you're about to place your first order, because up until that stage, you're not really conducting a business. And the company setup process takes about 2 days, so it's really quick. And then you need to make sure that everything's in the name of the company. Your supplier invoices in the name of the company. Your freight invoices in the name of the company. Your bank accounts are in the name of the company. Your seller central accounts are in the name of the company. Everything in the name of the company, so there's no leakages from a corporate structure that a good lawyer could find their way around. Okay, trusts. Many accountants will recommend trusts for trading businesses because of some tax flexibility that they offer. I don't agree with them. I think trusts are good for holding assets, property, shares, cash, but they're not good for trading businesses, especially inventory-heavy international trading businesses. And there's a couple of reasons for this. One, trust law is complicated. Basically, it's 600 years of common law, which is case law. And whereas companies are governed by the Corporations Act, so they're clearly defined. Now, a trust may be okay for Australian-based businesses, but once you start dealing with international business, it gets complicated because each country has a different definition of trusts, and some countries don't even have them at all, such as Europe. And trusts overseas are quite often associated with charities and tax evasions. So, plus, try explaining your trust structure, which a lot of people don't really understand themselves, to a seller central service rep or the IRS or Her Majesty's Revenue and Customs. But the main reason I don't like trusts for Amazon businesses is because of cash flow and complexity. Basically, trust profits have to be distributed each year and added to the taxable income of the beneficiaries, so that the distribution has to be lent back to the trust because the business needs the cash flow to keep expanding. In the first year of your Amazon business, you might make $30,000. The next year, $100,000. The next year, $300,000. And then you're paying tax at a much higher rate than 27.5%. And that extra tax will put you at a drain on your cash flow that prevents your business from actually growing. So I don't think trusts are the best structure for Amazon businesses. Trusts have one benefit, which is the capital gains tax exemptions and rollover relief on the sale of the business, which is an important thing, but I believe that the tax costs in leading up to that sale will prevent your business from being at the point where it can get a great sale price anyway. With companies, we can use other CGT rollovers like the active asset rollover relief and superannuation as well. So complex structures. Basically, trusts own the shares in the trading company. This allows for tax flexibility in terms of the flow of dividends from the company to any eligible beneficiary. Now, I don't recommend this for everyone due to the complexity and additional costs involved, but in some cases it is recommended when people have very high incomes, other investments, or corporate entities. So let's deal with an LLC. It's a question that comes up a lot. So some people in Facebook and groups say you need to set up an LLC. If you're a US citizen, then yes, LLCs are perfect for people in the US. But otherwise, no. There's no advantage to an LLC for an Australian resident and many disadvantages. Now you have to lodge a Form 5472 with the IRS if you're a foreign-owned LLC, which the Form 5472 is basically like a tax return. It's more of a tax declaration, but the penalties are severe. $10,000 for late lodgement, and then for the first 90 days, and then $10,000 for each 30 days thereafter. So a really expensive exercise if you ignore it. And plus, then you have to lodge tax returns in the USA and in Australia at different year ends and in different currencies. So there's a lot of additional costs there for things. Tax-wise, if an LLC has members, and basically an LLC is not, it's what's called a pass-through organisation, so it's not taxed in itself. So tax-wise, you'll be taxed in Australia in your personal name at your marginal rate, which makes it expensive, especially when we look at the growth that you can expect from an Amazon business. Now, a sale of business, I've heard many times that an LLC will make your business easier to sell. First thing is, no one will ever buy an LLC. They buy the assets of the LLC. So the inventory, seller central account, trademarks. If they buy the LLC, they're also taking over the liabilities of the LLC, lawsuits, loans, tax debts. So basically, an Australian Pty Limited company is all you need. The only reason that we might suggest that people look at an LLC is for commercial reasons. Their US-based suppliers will only deal with LLCs and they need a reseller certificate. So let's look at the international tax issues because it's something that comes up a lot of the time. So basically, you're going to be taxed in Australia for the profits that you make worldwide. You'll be taxed on your profits, and it doesn't matter whether you've got the money in US dollars or PayPal or Payoneer. It's when the profits happen that the taxable point happens. And people ask, well, what happens if I reinvest all my profits into more inventory? Basically, firstly, you're making a profit first, and then you're making another decision about what to do with those profits. Secondly, inventory is only a tax deduction when it's sold. We want you to keep your tax affairs as simple as possible. So once you start dealing with international tax issues, it becomes very expensive. So I hear people setting up companies in Hong Kong or Singapore to reduce tax. But the very moment they try and bring the money back so that they can spend it on themselves rather than their business, they pay far more tax than they would have if they just had a simple Australian company. Now the other question is, do I have to pay federal tax in the US? No, because we've got what's called a double taxation agreement. And the key to that double taxation agreement is something called a permanent establishment. So we have double taxation agreements with all the countries with Amazon marketplaces, which means that unless you have a permanent establishment in those countries, you will not be subject to income tax in those countries. So permanent establishment means an office, a factory, a warehouse, or employees. Now, an Amazon business does not have a permanent establishment as a warehouse for holding inventory is specifically excluded from the definition of a permanent establishment. So if people are saying, oh, your income needs to be taxable in the US, they're not taking into account the effects of the double taxation agreements. Okay, a quick checklist of things you need to do to cover all the administrative side of setting up your Amazon account and company, etc. Now, the time to get a company is when you're about to place your first order. So the first thing to do is get the company. Now, what we need there is we go set up a company, we get your ACN number, your ABN number, tax file number, we register you for GST on an annual basis, which means you only have to do a BAS return once a year, and you also get probably just a small refund at the end of the year. And we give you a bank account setup pack, so that enables you to go to the bank and with the right documents to set up bank accounts. Then we suggest you set up 3 accounts. We suggest an AUD bank account with a debit card attached. You won't keep very much money in your Australian dollar bank account. It's just so you can pay some subscriptions and a few odds and ends of things you need to pay. Most of the money you're going to have, or all the money you're going to have, is going to be held in your US dollar bank account. You want to keep all your money in US dollars. So we suggest you set up a US dollar bank account. You can get one of those from any of the big 4 banks, and you also need a World First account. Now, say we sent you, you'll get a better rate, and the World First account is so that Amazon can pay you in US dollars, and then we transfer that. Then you can transfer that money from your World First account into your US dollar bank account where you can pay your suppliers. Then once you've got those 3 accounts set up, then you can set up your Seller Central account. So you fill in the legal entity details with you as a non-US resident as a corporation. Then you complete the W8 Ben E form as part of the tax interview form as part of setting up Seller Central. If you've already set up a Seller Central account, you can just go in and change the legal entity over to your company. Then we want to add your ABN number in the GST VAT section of Seller Central. Then we can set up your products, set up FBA shipment advice, and we can pay for your order. Remember, all of these things are going to be in the company name. So we want to keep everything associated with your business in the company name so we don't get any potential leakages from that company setup. How you're going each month, and so you can make the right decisions. Now, we recommend 2 products. Xero, the accounting system, online accounting system, combined with A2X, which is a connector between Amazon and Xero. Now, the advantage of A2X, it enables you to calculate cost of goods sold and gross up the receipt from Amazon so that all your costs are included in the profit and loss. Now, the combination of A2X and Xero makes it really easy to get your accounts together, just super simple. The other advantage is when you go to sell your business, you've got accounts that match exactly to what Amazon reports are going to be. Now, if you're looking at selling your business, the accounting reports and having really good accounting will make the difference between whether you sell your business or not. So let's go over the main issues. The business structure that you use for your Amazon business needs to provide protection for your other assets, be tax efficient so that you pay the lowest tax possible, be suitable for the nature of your business, which is manufacturing and trading internationally online in multiple countries, and be simple and easy to use.